Wait, did you just realize that your ride-sharing app isn't just an app anymore? It's literally a bank. And not just any bank, a bank that's worth billions of dollars. In the next 13 minutes, you're going to discover how companies like Uber and Shopify quietly became financial institutions without ever setting up a single bank branch. And here's the crazy part. They did it so seamlessly that you probably didn't even notice. But once you understand how this works, you'll see it everywhere. You'll look at your apps completely differently. You'll realize that the future of money isn't being controlled by banks anymore. It's being controlled by the apps you already use every single day. So if you want to understand the future of finance and how your money is about to change forever, hit that subscribe button right now, because this information is going to blow your mind. Let's dive in. Okay, let's go back in time to 2009. That's when Uber first launched. Back then, if you wanted to get a ride, you called a taxi company. If you wanted to send money somewhere, you went to a bank or used Western Union. If you wanted a debit card, you sat down with a banker, filled out a bunch of paperwork, and you waited days or even weeks for approval. Everything was separated. Your ride was in one place, your payments were in a completely different place, and your banking was somewhere else entirely. 3 different companies, 3 different apps, 3 different logins, complete friction everywhere. But here's what nobody talks about. This separation wasn't because it was better. It wasn't because banks wanted it to be this way. It was because of regulations. You needed a special license to offer banking services. You needed insurance. You needed to jump through 1,000 legal hoops. Banks had a complete monopoly on financial services because they were literally the only ones legally allowed to do it. So when Uber launched in 2009, guess what their biggest problem was? Drivers couldn't get paid. Not immediately anyway. You work for Uber all week. You earn maybe $2,000, but you don't see that money for 3 to 7 days. Your rent is due tomorrow. Your gas tank is empty. You need groceries today, but tough luck. The banking system moves at a snail's pace. And Uber's founders looked at this problem and they thought, why should we force our drivers to wait? What if we could make money instant? What if the payment happened the moment the ride ended? And that's when everything changed. That's when they had the eureka moment that would revolutionize finance forever. In 2010, Uber partnered with a payment processor called Braintree. Instead of building their own bank, which would take years and cost billions of dollars and require government approval, they did something much smarter. They embedded financial services directly into their app. By 2011, Uber had in-app payments. You could store your credit card in Uber's app. You could pay right there in the app, instantly without any friction. But Uber wasn't stopping at just payments. They were thinking way bigger. They were thinking, what if drivers could get paid instantly? What if they could have their own debit card? What if the Uber app became their actual bank? And this is when embedded finance was born. Embedded finance is basically taking all the stuff that banks do, like payments, lending, debit cards, savings accounts, and putting them inside apps that you already use every single day. No new logins, no new app downloads, no more visiting a bank. It's all just there. Think about it. You're ordering food on DoorDash, and suddenly financing options appear to pay later. You're shopping on Amazon and suddenly there's a loan offer for sellers. You're driving with Uber and suddenly you have a debit card, a bank account, and instant payouts. The revolution is invisible. You don't even notice it's happening. But here's the brilliant part that most people don't understand. Uber isn't actually a bank. They're not regulated by the Federal Reserve. They don't have vaults. They don't manage your money directly. Instead, what they do is partner with real banks in the background. The bank handles all the boring stuff, the regulations, the compliance, the legal responsibility. Uber gets to offer banking services without any of the headaches. It's like outsourcing. It's genius. Uber offers the experience. A real bank handles the regulations. Both companies win, and most importantly, the customer wins because they get instant service without any of the traditional bank friction. Let me tell you exactly what Uber did with the Uber Pro Card by 2024. They launched a debit card that ties directly into driver earnings. Let's say you complete a ride at 11:47 p.m. and you make $32. In the old world, that money sits in Uber's system for days. Nobody's happy. The driver is stressed. But in the new world with embedded finance, you instantly transfer that $32 to your debit card and you can use it right now, right this second. You can buy gas, you can grab dinner, you can pay your rent, you can do anything you want. The card itself offers cash back on gas. There's no minimum balance, there's no overdraft fees. It's literally designed for gig workers because Uber knows their drivers' financial pain points. They see the data, they understand what drivers need. And here's the insane part that most people don't realize. Uber makes money off this. They take a small fee from every single transaction. They offer cash advances to drivers at interest rates that are competitive with traditional banks. They collect data about driver spending habits, which helps them target promotions and offers. And all of this keeps drivers locked in the Uber ecosystem. Think about it from a driver's perspective. Why would you switch to Lyft if Lyft doesn't offer instant payouts? Why would you use a different gig platform if Uber is literally handling all your banking? Uber didn't just build a better ride-sharing app. They built an entire financial ecosystem, and that's way harder to leave. That's way stickier. That's way more valuable. But Uber is just the beginning. Because while Uber was targeting individual drivers, another company was targeting small businesses. And they created something even more powerful. Think about what just happened here. Sarah logs into her Shopify dashboard one single time. She sees her sales. She processes payments. She applies for a loan. She transfers money. She spends money. Everything happens in one place. Everything is connected. And here's the absolute kicker that blows most people's minds. Over 73% of Shopify's revenue now comes from merchant services. Let me repeat that because it's so important. The majority of Shopify's entire revenue is from financial services. When Shopify started, they were a software company. You paid them a monthly fee to use their e-commerce platform. Now, most of their money comes from financial services. They're not a software company pretending to offer finance anymore. They're a financial services company that uses software. The transformation is complete. And the beautiful part is that small businesses absolutely love this because it's fast. Loans are approved in minutes, not weeks. It's simple. No complicated applications, no bank meetings, no 20-page documents. It's data-driven. Shopify's algorithm actually understands your business because it sees all your transactions in real time. And it's cheaper. The fees are lower because Shopify doesn't have the overhead of a traditional bank. Now compare that to going to a traditional bank. You need to prepare financial statements. You need to create a full business plan. You need to provide tax returns, usually 2 or 3 years worth. You need to schedule meetings and wait for callbacks. You need to wait weeks for approval. And honestly, you might still get rejected. With Shopify Capital, Sarah just logs in and it's like, hey, Sarah, based on your sales data, we can give you $15,000 right now. Are you interested? Instant, simple, done. It's not even close. Okay, so Uber and Shopify figured this out, but they're definitely not alone. Apple launched the Apple Card. It's not a credit card from a bank. It's a financial product designed by Apple, living in your Apple Wallet. Amazon offers embedded lending to sellers. Entrepreneurs can get loans right from their seller dashboard without leaving Amazon. Klarna and Affirm, they let you split purchases into installments at checkout. You never leave the store's website. DoorDash offers cash advances to delivery drivers so they don't have to wait for payday. Even Airbnb is exploring embedded insurance and payments for hosts. The ecosystem is absolutely exploding right now. The market is moving incredibly fast. In 2023, the embedded finance market was worth about $100 billion. By 2025, it hit $150 billion. And by 2030, estimates range from $700 billion all the way up to $7 trillion, depending on adoption rates. The market is growing at 28 to 36% every single year. That's faster than any other financial sector. That's way faster than traditional banking. The future of money isn't happening in banks. The future of money is happening in your apps. The future of money is happening right now in 2025. So, why should you care about all of this? Why does this matter for you personally? Well, here's the thing. This changes everything about how money works. First of all, banks are becoming invisible. For literally 200 years, banks were the interface between you and your money. You had to interact with a bank to access your finances. But now the bank is just the back end. You interact with Uber or Shopify or Apple. The bank is just there handling the boring stuff in the background. You probably don't even know which bank is behind your Uber debit card. You probably don't even know which bank is handling your Shopify loans. And honestly, you don't need to know. That's the whole point. Banks are becoming invisible infrastructure. Second, speed is becoming normal. You can't get a traditional loan from a traditional bank in 5 minutes. It's not possible, but Shopify will give you one. Uber will pay you in seconds. Soon, instant will be the expectation. Younger generations won't understand how banking used to work. They won't understand waiting a week for a payment to clear. They won't understand bank hours or business days. Everything will be instant. Third, your data is worth gold. When Shopify sees all your sales data, they know your business better than you do sometimes. When Uber sees all your rides and your spending patterns, they know what you need before you even ask. That data is used to create personalized financial products specifically designed for you. And eventually, AI is going to take this even further. Imagine this. Your app knows you're about to face a cash flow problem 2 months in advance and automatically offers you a loan before you even need it. That's coming. That's happening very soon. Fourth, new companies will win. The companies that are going to win over the next 10 years won't be the ones with the best bank. They'll be the ones with the best ecosystem. Why go to Chase when your entire financial life can happen in the Uber app? Why use Wells Fargo when Shopify handles everything? Why open multiple accounts when one app does it all? Traditional banks are absolutely panicking about this right now. They're trying to compete, but they're slow. They're regulated. They're bureaucratic. They're stuck in old systems. Meanwhile, Uber and Shopify and Apple are moving at light speed. They're agile, they're fast, they understand customers, they're going to dominate. But here's something you absolutely need to know, and I don't want you to miss this part. This isn't all sunshine and rainbows. There are some real concerns here. When everything is embedded in one app, you're putting all your eggs in one basket. If Shopify has an outage, you can't access your business account. You can't process payments. You can't transfer money. Your entire business is down. If Uber changes their fees, you're stuck. You can't go anywhere else because they're your bank now. There's also serious regulation concerns. These companies are offering financial services, but they're not traditional banks. The rules are still being written. Governments are still figuring out how to regulate this. In 5 years, everything could change. There could be new restrictions. There could be new requirements. There's also data security concerns. The more financial information these companies collect about you, the more valuable the target becomes for hackers. If Shopify gets hacked, hackers don't just get your sales data. They get your banking information. They get your financial data. That's a massive risk. These are real issues, and they're important to understand. But here's the thing. The benefits are so much greater than the risks that embedded finance is unstoppable. It's the future. These concerns exist, but they're not going to stop this revolution. They're just going to be something we figure out along the way. So here's what's actually coming in the next 5 years. You probably won't use a traditional bank app for most of your financial needs. Your banking will be fragmented across 5 to 10 different apps. But here's the key point. Those apps won't be banks. Those apps will be your favorite shopping platform, your work app, your ride sharing service, your favorite social media app. Finance goes completely omni-channel, and the companies that get embedded finance right will be absolutely unstoppable. They'll have higher customer loyalty. You won't leave them because they're handling everything for you. They'll have more revenue streams. They'll make money from payments, from lending, from data. They'll have better data. They'll know you better than traditional banks ever could. They'll have more financial control. They literally own the relationship with the customer. This is before we even talk about AI, before we even talk about blockchain, before we even talk about cryptocurrency, making all of this even crazier. And here's the most important thing I want you to understand. Most people have absolutely no idea this is happening. When they need a loan, they'll go to a bank. When they want to save money, they'll use a savings account. When they need financial services, they'll think of traditional banking. They'll be years behind, but not you. You just watched this video. You understand embedded finance. You know where the future is going. You understand that the financial world is changing, and that's worth something. That's valuable knowledge. So if you want to stay ahead of the curve, if you want to understand the future of business and money and technology before everyone else figures it out, hit that subscribe button. We break down complex topics like this every single week. We help you understand the future before it happens. And please drop a comment below. What surprised you the most about this? Do you think embedded finance is the future? Are you using any of these services already? I read the comments and I respond to them. I want to know what you think. And if you have friends who think banks are secure and think the traditional financial system is untouchable, send them this video. Watch them realize that the world changed and they didn't even notice. Watch their reaction when they understand that Uber isn't just a ride-sharing company anymore. Watch them when they realize that Shopify basically became a bank. It's eye-opening. It's the kind of information that makes you see the world differently. Thanks so much for watching. I really appreciate it. I'll catch you in the next one.